forward. Mithun Aswath is with us, managing partner at Kiva Advisors. Mithun, good to have you with us here. Thank you for your time. Occasionally we get these pullbacks, don't we? We saw something similar with the Nifty Bank a few weeks ago when we got very close to all-time highs. Then I think for a few days, the Nifty Bank went a little sideways and then finally, of course, reclaimed those highs. So maybe this is a repeat, one doesn't know. But do you, by the way, have any views on IEX, Mithun? Do you own the stock? Do you track it? It's selling off sharply.
No, Prashant. This is not something that we track closely. So we don't have a position there.
Okay, no, got that. We'll actually have our colleague Vivek come up and explain why the stock is selling off. Let's have the stock up. Nifty, by the way, is down 80 points. Mithun, just a broad index view from here. Mithun, how are things looking? It's been pretty much a one-sided market, right? Firmly, in the bull corner, and then occasionally you get these shakeouts as well. But what's your view?
I think, Prashant, over the last few weeks, you saw a lot of FI flows into the market. Over $5 billion came into the market in May. And also, this led to quite a broad-based rally. You saw a lot of participation in the mid and small caps. I think the market has taken a view that interest rates are not likely to move up in India at least. And for that reason, you've seen markets, deliver good returns. And the expectation is after a pause, potentially there could be a rate cut. It could be, 2-3 quarters from here. However, yesterday, I think two central banks surprised with rate hikes, both the Canadian and Australian central banks. And we've also seen a little bit of a bump up in the 10-year yield in the US. And that has caused some sort of worries on the international front. I think, the NASDAQ was down close to 2% yesterday. And this is having a rub-off effect in India. I think what is more important is to hear what the Fed talks on the 13th, 14th, when the US policy is there. And I think that will be quite critical because I think the CPI data is also on the 13th. So that will give a more direction to global rates and if the Fed is not too hawkish, that would kind of assuage fears and, we could resume some sort of upturn.
Mithun, afternoon, Rima here. Correct me if I'm wrong, but PB Fintech was one of your ideas, right, which you liked? So what have you made of this BofA report where they are concerned about the valuations? They're saying that PB Fintech is trading at twice the valuations of Paytm. Are you worried about, the kind of valuations of PB Fintech?
Not really, Rima. I think, this is one of the, companies on the new age side where, there is a pretty much certain path to profitability. Even the last quarter, there has been improvement in both the insurance side as well as the credit side of the business. And we do think, the company is likely to grow much faster than the insurance industry. They themselves are talking about 3x growth of the industry. So I think, PB Fintech is well positioned. They have a large cash pile of close to 5,000 crores, which constitutes about 15% of its market cap. So I think it's still well positioned. There has been a sharp up move in the last few weeks. But I still think, this is a good compounder if one has, a 2 to 3 year view. And I think it's quite well positioned.
Why PB Fintech over Paytm?
We don't cover Paytm. The PB Fintech is the one that we hold.
Okay, got that. Mithun, hi, good afternoon. What are you liking in the consumer space, if anything, at all? And trends are very different, right? Top end of consumption has been doing very well. That's evident in, prime real estate. That's evident in the really strong retail sales data, the auto sales data that we've got for May. But FMCG kind of dwindling along or twiddling along, if I can say. Do you like consumer? And if yes, what part, what sort of companies?
Yeah, I think, Surabhi, over the last maybe 1 year or so, you saw a lot of growth in the high-end consumption because there was a rural slowdown. and they were more impacted by COVID. But as things normalize, we are seeing companies talk about improvement in demand from the rural side as well. You would have heard of some two-wheeler companies talking about improvement in demand and giving reasonable guidance for the next fiscal. So we think companies on the FMCG side, two-wheeler side, which did not see too much of demand from the rural side, will actually start seeing that in FY24. Plus, I think a lot of the companies on FMCG and auto will also see margin expansion because of the commodities also easing off. So I think that argument kind of bodes well for the entire corporate sector, where with the lower commodity prices and logistics costs subsiding, you will see scope for margin expansion.
Okay, all right, Mithun, we'll leave it there. Thank you very much for joining us and running us through, those themes. Appreciate it very much here. We're up, 75?